Our next guest, I should say, says the deal makes sense, though, from a strategic standpoint and could significantly increase Dick's buying power in the market. Don't let the regulators hear. Let's bring in Michael Baker. He's senior research analyst at D.A. Davidson. Michael, welcome. So you would be a quote unquote a buyer here of the sell-off.
Oh, we would be, yeah. And I get why the stock is down. This does increase some execution risks, and it takes what to me what was a very clean story in Dick's and muddies it a little bit in the short term. But when we step back and look at it from the bigger picture, we really like what we're seeing here. It actually reminds me of maybe even 20 years ago, Dick's bought Golf Galaxy, and it really gave him a bigger seat at the table in the golf business. It was initially thought of as a bad deal. But what happened is every golf vendor needed to, then come to Dick's and work with Dick's to put better product in and get better pricing, et cetera. And it really helped Dick's golf business. And we sort of see the same thing happening in the footwear business. Dick's is already very strong in footwear, but they're that much stronger now and push that much of a bigger pencil with vendors now.
I love this point because this makes sense to me. A lot of people are going, why do they want the mall? Foot Locker's been struggling. It isn't 20 years ago. But when you say power over suppliers, I immediately go, yeah, no, I get it.
Right. And that's been a key part of the story for Dick's over time. Anyway, their percent of Nike's North American wholesale business has gone from about 7 or 8% to closer to 18% over the last 10 years. They're basically even with Foot Locker now, both at about 17 or 18%. But now combined, that means Dick's is a full 35, 36% of Nike's wholesale business. Nike was important to Dick's, but Dick's is now that much more important for Nike. And it is a partnership. They try not to be adversarial with each other, but any move that Nike wants to do in terms of a turnaround in the U.S. has got to involve Dick's now.
Can't believe I would ask this question, but would there ever be antitrust concerns if they have 40% of the market? Look, it's not 50. But I don't know, if the price of sneakers is going up anyway because of tariffs, Nike's in the middle of a turnaround, could this come back to haunt them?
Well, they don't have 40% of the market. Their market share combined is much smaller than that,
right.
Less than 30, maybe even as low as 10. It all depends on how the market is defined by the FTC, and that you never really know. But they do have 35 to 36% of Nike's wholesale business, right. Different than the overall market. In terms of FTC risk, we don't really see it because we don't think they have that much market share. But again, we've been surprised by some of the FTC rulings in the past. It all depends on how they define the market. And that certainly is a risk here. Again, we don't see it as a high risk, but it's greater than zero.
No, it's almost
that is impacting the stock.
It's almost a joke, except that it's not. Because, again, when you stop a handbag merger, you go, I guess it's time to consider every possible merger that takes place in the space. So we had Skechers go private a few weeks ago. They were obviously hit hard by tariffs, opportunistic move by management there. Now we have Foot Locker. Again, $24 a share is not even the 52-week high. They're being taken out by Dick's. Where else might we start to see this kind of action across the space?
Well, yeah, you said it before the break. Dick's stock has been up, 1,000% since the pandemic. Foot Locker stock has languished. There are a lot of assets out there that the stock price has languished, and that does create opportunities. Not in a position to sort of suggest to anyone in particular, but I do think you could see more of this M&A activity with some of the valuations, much more compressed, particularly companies with strong balance sheets. Dick's has $1.7 billion in cash, no debt. That cash just on the balance sheet almost covers this deal. So they're in a strong position to be able to do something like this. And there are a lot of retailers out there who have done well, others that haven't done well, and stock prices are languishing. So that could set up for some M&A activity.
Yeah.